Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at oil. Now I would normally be pairing the oil video with the TLT video just to save time, but I haven't updated TLT to my new chart format yet. I'm still going through all my charts and bringing them into line with one another to use the new format that I've been doing recently. So I've got oil updated, so we're going to go over that today. And of course, when we say oil, we say CFDs on WTI, which is the West Texas Intermediate price, and that's what we're looking at. We have a bullish count and a bearish count to review, so we'll do our technical analysis first, and then we'll look at some basic technical analysis in support of it. So first, the bullish count we're going to look at. This is the idea that we've completed a wave 1, a wave 2, a wave 3, a wave 4 is now done, and we're going to impulse higher in a wave 5, and we've got a nice simple impulse wave off of the 2020 low, which is coming up to cycle degree completion over the next few months. If we've got a pitchfork here to support this idea, pivoted off of 1-2 here. 3 came to the top of the pitchfork, the 3 of the 3 had a throw over within the pitchfork, which we like to see. That's where the momentum was, and now we seem to have done a 4 and now pushing higher into a 5. So that's all nice, and that looks pretty good. It looks pretty convincing, doesn't it? Alright, so let's get rid of that. Now I do have one issue I have at the moment, which is the way we've come off the bottom of this channel after our supposed completion of the primary wave 4. We don't have a clearly defined impulse at all, which is a bit of a bitch, because it makes it difficult to trade. It makes it difficult to have certainty that the correction is complete. I am erring on the side that it is for the moment. A breakdown from here in an impulsive manner from inside of this channel may have me changing my mind, but for the moment we seem to have done enough. So what do I mean by when I say done enough? Well, we've already seen the pitchfork that we were using here. Now what we've got is this horrible skew into the wave 1 and the wave 2. Now the reason for that is, and you have to keep an open mind when thinking about this, is we came up from effectively zero. Or actually oil traded below it, but the chart doesn't trade from down there, so we've come up essentially infinite percent. So we can only observe the chart in linear scale. We can't observe it in log scale from the bottom, because, well, you know, if you try to, we've got to account for that infinite percent move, and then the chart looks like this. Yeah, it doesn't mean anything anymore. So in order to get any use out of the log scale, we've got to zoom in and ignore the whole bottom of that of the chart, which is 99.9% of the price action. So I'm just looking at it in linear to save me that hassle. It's the only thing we've really got to go on. Now we did break this pitchfork with the WXY I've got suggested here. We broke the outer bound, not the extreme outer bound, but we're still within it, and we've bounced back inside into this channeling area here. So if we just come and have a look at what we've done, I just want to bring up the momentum indicators now, because I just want to check something. So here's the peak of our RSI here. If we just find that, and that's right, 86 or so, and if we just get a vertical line on it right there, we can see that this occurred within our wave 3. Here's our primary 3. Here's our 1, 2 down to here. Here's our primary 3. Now it happened to occur within the 3rd intermediate wave. So it was the 3rd minute wave within the minor 5th, within the intermediate 3, within the primary 3. So the 3 of the 3, essentially around the 3 of the 3 is when we get this biggest peak in momentum. The peak here is not as high as it was coming off of the low, but I do think that the case where we normally look for the highest move in the MACD to be in the 3 of the 3, I think we have to waver that this time, because oil's come up infinite percent, so we have to give it the benefit of a doubt that the move from 0 to 40 something bucks is going to be the most powerful. Now, it was in MACD, but it wasn't here in the RSI. We did get a higher reading in the 3 of the 3, so I find that reassuring that this is the third wave of a third wave, where the relative strength peaks as we come up to fine, and we get that little throw over, which is quite common again. When we're looking at a pitchfork or a channel, we tend to get that throw over in the 3 of the 3. And then we arrive at the primary 3 up here, come down through the pitchfork. You can see here how the median line has dominated price action on the way up. After this wave 4 completed, we had this touch of the outside bound, then we came back to test the outside bound here, then we came back to the median line with a whole bundle of lows, 1, 2, 3, 4, and then another test here, bounce off of it, back to the outer bound here, work our way to the 38.2, and then up, and then down to this 38.2, up to this 38.2, 61.8, and then down out of the pitchfork. So it could be the completion of something bigger, but I would expect to see the pitchfork break again, and for us to lose the market geometry at this wave degree. At that point, I'd be like, yeah, it's more bearish, it's a bigger correction, and the cycle degree is definitely bigger than what we were first assuming here in the bullish count. So let's just hide that for the moment. Okay, so what have we got in support of it? Well, you see this green box we've got over here. This represents where we've just been looking at that momentum. This represents the wave degree, one lesser wave degree sorry, let me start again. A wave 4 correction of one lesser degree. So here's primary, here's intermediate, and price has returned, as you can see, straight into the middle of a previous wave 4 territory. Why is my... There we go. Wasn't working for a moment there. So yeah, as you can see, price came straight into the middle of this previous prior wave 4, where we've got this resistance here, and you know, this support here and this support here. This created a level, and then we came down, hit that level, and bounced. So there you go. So we have done enough. We've come down into a prior wave 4. We've retraced somewhere between, I've got targets here, somewhere between the 23.6 and the 38.2. Didn't quite make the 38.2, and we've bounced. So there you go. Strong case for the a strong bullish case there. I would say that we've done enough to call this a completed primary wave 4, and therefore can expect the move up into the primary 5, which will complete at cyclical degree the first major bull market move off of the zero low. And then we'd be looking at a huge retracement. Now, if we think about our view for a moment on the stock markets that we have, which is we're in the process of perhaps trying to top out in this primary 3. We haven't begun our 4 yet. It could be a case that the final push up into the 5 in the stock market will follow the push up from the oil market into its wave 5, and both will reach cyclical peaks. Probably with oil leading the way. Commodities will likely turn down first. Oil will turn down first, global demand, and yada yada yada, and then the stock markets with the excessive exuberance in them will probably stay up for a bit longer, and they'll peak later. That's just a theory. So maybe that's why oil's already been correcting and is ready to make its next move, whereas the stock market hasn't really corrected yet. I do believe one's coming at a larger primary degree, but I still feel that another huge thrust up afterwards is still the most likely scenario for the stock market. So having another wave left in the oil market does make sense. Right, so that's the bullish count. So we waffled on about that long enough. So let's have a look now at the bearish count. And what are the levels of these? Oh, it's the top. What did I put that there for? I can't remember. I'll delete that. That's just a spare label. I think I ended up doing the same levels twice. That's probably what I did. So let's bring up the bearish count. So the bearish count is a bit different. Now, the thing which supports this count, the momentum we looked at on the bullish count, excuse me, showed us the 3 of the 5 of the 3. So 3 of minute of the 5th of minute of the 3 primary which was all the way up here, of course. Now, I've decided to take the liberty of counting it differently. If I'm going to present a different idea, I might as well count the thing differently and explore the options. So here we get the same peak, but it is in the free of the free. It's in the intermediate free of the primary free, where we get our peak in the RSI and the peak in the MACD here, ignoring, of course, this massive infinite percentage swing that we've mentioned. So this fits just as nicely. In fact, you could argue perhaps nicer. Nicer, I think. So in this scenario, rather than interpreting this as a WXY and a wave 4, we're saying that we've already completed cycle wave 1 and the bull market in oils already stopped, and we're now into a bear market at cycle degree, which could go on for some time, because we don't know whether we're looking at an A, a B or a C, or whether we're looking at a 1, 2, 3, 4, 5 A, B, C going on for a long time. So if this is the case and oil's already peaked and global demand slipping and commodities are going to lead the way down and oil price is not going to recover but continue to lead the way down, then it's peaked before equities, which also supports the idea which equities will hang on longer before they give up the ghost. So this interpretation, and I'm not as keen on it, this is definitely my alternate count to the bullish count, and not for any reason particular leading us up to this cyclical high, but because of the price activity since. So if we come down to the 1 hour, and I'll show you my concerns with this. Right, we have a zigzag into a 1. Okay, we have a zigzag into a 2. We have a zigzag into a 3, which is longer than the 1, and we have a zigzag into the 4, which is deeper than the 2. And then we have a zigzag into a 5, which is longer than the 3. So this satisfies all of the parameters we would like to see for an expanding diagonal. Now, it occurs as a leading diagonal in this case, but shows no 5-wave structures. It shows what are primarily, and I would argue definitely, well not definitely, most likely 3-wave structures, which would always occur in an ending diagonal. Also, we don't have any like nice conical wedge shape. You know, whether we get a contracting diagonal, which looks a bit, you go up, and you have each wave getting smaller over time. So the 1's longer than the 3, the 5 is shorter than the 3, and then the 4 is shorter than the 2, so on and so forth. An expanding diagonal should look the opposite. It should look like this, where you get a wave 1 down, and then the 2, and then you get a 3, which is longer than the 1, and the 4 overlaps the 1, and then the 5's longer than the 3, and we get some kind of shape like that. Now we've got the measurements to give us that, but we don't get anything that we can really hook up. Which is particularly convincing. You could say yes, it's a wedge shape, but 5 gets nowhere near the outer trend line. That's not that unusual, but when the 5 fails to meet the trend line, which it tends to do in an ending diagonal, this is a leading diagonal, but in a zigzag pattern, in a diagonal, in an expanding variety, the 5 won't necessarily make it to the trend line. It will fall short, but we have fallen short by a significant degree. I mean, if I saw something which looked like, well, that's a little too good. 1, 2, 3, 4, that's looking good, and the 5 came to here and then did this, I'd be like, yeah, that looks pretty good. But because we came down in such an exaggerated and slow zigzag, we've left all this space. Now that's okay, I can live with that. The shape isn't beautiful, it isn't perfect, but it is an expanding pattern. Alright, so it's good enough. The measurements are there, and it's also what was that? No, what I was about to say isn't really fair. I'd still argue, going back to the idea of a zigzag connected to a zigzag, just looks cleaner to me. W and Y joined by an X. But we have to consider this possibility too. So if this is an A down and this is a B, then if we extend this, I mean, we won't necessarily, because we started with a diagonal rather than an impulse, we won't necessarily stay within this channel now. If we were to impulse down, we could quite easily just fall out of this thing and continue lower. Now currently we do seem to have some bullish activity as I speak to you now, and we either have a 5-wave move down here. Let's just have a look from the high. 1, 2, 3, 4, 5 potentially. This could be a 3-wave move now. So the most short-term measurement we can make is whether or not we go above these highs. So we've retraced into the golden zone, found resistance, bounced around for a bit, and now we're breaking higher. So if we go above these highs, then we're going to continue higher for the short term at least. If we retreat before these highs and then turn down, then there's an argument to suggest that this is 5, this will be 3, and then we're going to come down, and then this move will either be a C or a 3. Okay, given our two different scenarios, not much help, I know, because there's no way of differentiating. The C will, if it's a zigzag, which it looks like it would be, the C would likely come to parity with the A. So in the bullish scenario, I know I'm flipping back and forth, trying not to confuse you, but in the bullish scenario, that would mean 5, 3, 5. So down 5, up in 3, down in 5, and then this would be a buy. Off you go, and that would be our best attempt at making an impulse wave out of this. 1, 2, so on and so forth. 3, 4, 5. We don't have a very clear impulse up here though, which is very frustrating. We don't have a nice wave 1 anywhere to point to. We have this pivot here, which could be an A into a B and a short C. 3-wave structure looks better than the 5-wave structure, and then we have a 5-wave down, 3 up. So for the moment, unless these highs break, no, I'm not going to say it. I don't want to. What's the word? Jinx myself. If these highs break, we're going to continue up, and this is likely the first move up of a 5-wave move. How we're going to account for it, I'm not quite sure. We could say 1 A B C A. A, B, C, B, 1, 2, 3, 4, 5 into the C. I guess that would be your best bet. A really shallow 1, 2 that's already been complete and is now impulsing up into a 3. We didn't even make it to the 38.2. So if the bullish case is correct, this will be an impulse on a smaller time frame. It will break this high, it will then pull back, and there's your buying opportunity to go higher. That's the way I would look at it. If we don't break these current highs, around what our proposed top of our wave be at roughly 70, it was 70.610 in that region. If we don't break these highs and we retreat before them to a lower low, then it's likely that this was 5 down, 3 back, and now we're coming down in either A, B, C for that deeper 2, or we're going to go beyond parity to the 1618 to find the 3, to find the 4, to find the 5 of a 1, and then a 2, and then a 3, and so on and so forth, and we get that bigger correction down all the way down to this C into the cycle 2 here. Okay, I hope I haven't confused you too much. I know it could be a little confusing going back and forth between counts sometimes, but we are in one of those sticky situations at the moment where we seem to have an impulse down and a corrective move back up. So you'll know by the time you watch this, because this video won't be out till tomorrow once I've edited it, produced it, so on and so forth. You'll know whether this held or not, or whether we retreated. So there you go, there's the way I see the two counts at the moment. And yeah, so let's do some basic technical analysis. We'll just hide the bear count. Let's get rid of all the junk on the chart for the moment. Okay, what was that one? Okay, what I'll do is I'll just label that. It'll let me. Short-term high, as we don't know whether it's going to hold or not, or if it's relevant, if this is a pivot lower, or this is simply a wave 1, 2, 3 higher. We don't know that yet. Okay, and then we can hide that off the chart. This horizontal ray, that's showing us into the wave 4, we don't need that anymore. That's the top. Right, let's come out to the weekly time frame. Bring up our momentum indicators, and then bring up our exponential moving averages. Let's just hide this thing as well. Okay, so we have a 10 in yellow, a 20 in blue, a 60 in orange, and a 250 in green. We have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. We also have a MACD with a 10 for the average and a 20 for the signal. So, right, the first thing which should be pointing out to absolutely everybody is the divergence we spotted several weeks ago when we last covered oil played out, but we don't know if it's complete yet. That's what we've just been discussing. So this divergence between the highs in the MACD and the lower high, and the clear divergence here in the RSI as well between this high and this high, and then that made up the bearish divergence underlying this high and higher high in price, showing the underlying weakness. After we completed the three here, we push up into that 5 on a smaller time frame. This is where divergence occurs. It occurs between 9 times out of 10, and you'll see it on multiple time frames. Depending on the wave degree, we complete a wave 3, we lose a lot of momentum into the 4, and then we push higher on weaker momentum and often weaker volume into the wave 5. And then these are the signals that we're finished with the 3. Elliott wave traders can then choose that, well, we've had our run up in the 3, we'll get out now, or we'll start getting much tighter with our stops because we're in the 5. So that's played out, and for the moment, like I said, one of the telltale signs will be whether or not we hold that pitchfork. You know, on the weekly time frame, you could argue we've broken the bound here, but we haven't completely collapsed. Another move out of it, then I think the bearish count of the idea that we've completed a cyclical top gains more support, and that this long divergence from March into June is going to result in more than just the correction we've seen so far. Strong bounce from here back within the pitchfork, pushing up towards new highs, would support the bearish view, the bullish view, excuse me. So trading and bouncing off of the 20 exponential moving average at the moment, trading just above the 10 as well as I speak to you. Bullish candle here. I think this is, now we can't call it a hammer because it hasn't occurred at the bottom of a pattern, so it's not a bullish reversal candle. If it's a top and we get a inside bearish candle or inside engulfing bearish candle here in the next week, then this would have likely been a hanging man, but it's not perfect either, as it's not sat at the top of the pattern. It's internal to this previous week's candle, so for the moment it's just an unresolved candle. It looks a bullish wick to the downside, but still trading within the previous week's price action. Now on the daily time frame, we are above the 10, above the 20, above the 60, with the 10 and the 20 coming back above and ready to cross through the 60 here. So a golden cross on the daily time frame here, but not the big one that we look for, which is the 60 and the 250. That's in much bigger bear markets and much bigger pivots. But on the day time frame, 10 and the 20 crossing back through the 60 is what we would call a golden cross. As I pointed out before, this can often symbolize the bottom or the top being close. You know, when we see the 20 here cross over the 60, the blue line cross over the 60, it was 1 to 3 weeks later then we bottomed. So yes, you've run down that last little bit, but you've already done most of the selling by the time this so-called death cross arrives. So have we done most of the buying by the time this golden cross arrives? I'll have to wait and see. We've got the same lower, you know, slow down here. We can see all the way from the wave 1 to the wave 3, or 3 of the 3, or 5. Lower readings in the MACD the whole time, and lower readings in the RSI the whole time. No bullish divergence on the bottom yet, so something you look for, that really is. I mean, this leans towards the idea that you've got another low to come, which will set a higher low in the RSI and a higher low in the MACD. So no bullish divergence to speak of. If we on the day time frame, if we just come down a little lower onto the 4 hour and see if we can find anything positive. There was a little divergence between these and these, which led to this rally here. But no, this you've got divergence on the 4 hour time frame between these lows and these lows, same as you have here on the MACD. So there was, but that could literally just be the divergence building up before this corrective move higher. So we haven't seen anything like that play out on the daily time frame yet. The two significant lows, this one and this one, is a low and a lower low, low and a lower low, low and a lower low. So anyway, I think that's all we've really got to talk about today, guys. So thank you for joining me on this technical analysis of oil. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And as always, thank you very much to my Patreon subscribers. If you're interested in joining the Patreon, there's a link in the description box below. Go over, have a read of the different tiers and what's on offer. And if you're interested, feel free to sign up. Also, there's a link to my Twitter feed in the description box below as well. If you're not following me yet, please do so. Alright guys, take care and I'll be back with you soon. All the best. Bye bye.